In the first half of 2015, Ferrovial has posted a very strong set of results. Revenue for the group is growing more than 13%, EBITDA is growing more than 23%, and net income is growing more than 50%. This is helped by the strong performance of all the divisions and also by the strength of the currencies like the pound sterling, the US dollar, or the Canadian dollar vis-à-vis the euro. Starting with the performance of toll roads, there's basically growth across all the portfolio. I would like to highlight the 407 ETR that has growth in the quarter of more than 3% vis-à-vis last year and is showing EBITDA growth of more than 15%. Also, the Northland Express, the managed lanes that we opened last year, are showing encouraging growth with EBITDA growing more than 46% and traffic up 24% vis-à-vis the first quarter. Moving into airports, I would like to highlight the performance of Heathrow with EBITDA growing more than 10% with a focus in cost efficiencies and traffic growing more than 1%. And also the regional airports, Glasgow, Aberdeen and Southampton, where EBITDA is growing more than 11%. Moving into construction, there's good growth from the international division. Budimex is growing at double-digit both revenues and EBITDA, and margins remain the best or among the best in the sector. If we look into services is showing good growth with margins improving in Spain and margins tighter in the UK due to pressure from public clients with cost pressure in their budgets. If we look into the backlog remains stable, but we are not reflecting a lot of commercial success that has happened recently. In terms of the net cash position, we are posting 1,450 million euros of net cash at the end of the quarter. This is helped by good dividends from the 407 and Heathrow, growing vis-à-vis last year, and also the first dividend of 17 million euros our share from Glasgow, Aberdeen and Southampton. Also, we have to bear in mind that there's working capital drain from seasonal effects in the first half of the year, but we are not using factoring. We had 100 million euros at the end of last year. We don't have that anymore. So the performance is very good. We have to bear in mind that we are investing more, something like 40 million euros more investment this year, and also that this year remuneration to shareholders started earlier, so the first scrip dividend is already gone. We're already buying back shares, and that means something like 160 million euros that have gone to remunerate shareholders in the first half of the year already. Also, the company is taking profit of the good financial conditions to raise long-term debt at Heathrow and the 407 ETR, also to improve the conditions of our liquidity facilities. So the company remains in an excellent position because of the operating trends and the solid cash position for the remainder of the year. And we have to bear in mind that also in this second half of the year, we'll see the final decision of the UK government regarding the potential airport expansion of Heathrow.